Why are home buyers more confused than ever? With all the technology and all the things that are available online, there's actually more confusion than ever before. I've chosen the 5 biggest myths that as a mortgage loan officer, I see every single day. And the goal here is that you are armed with real information, real facts, no BS, so you can make really good decisions for yourself. And I've got 3 power tips to help you navigate the storm and make sure that you don't fall into the trap of being misinformed. So the quantity of information online is just overwhelming. I think we all can agree. There's short videos on social media. There's, you go on the internet and do a search, and there's 50 pages that come up with the same topic. In fact, I did a bunch of research myself before I put today's presentation together, and I was like confused more than ever before. So I want to hear your questions today. I want to hear from you. I would love to know what your questions are. We can answer them. We are going live. So whatever platform that you're watching this on, feel free to hang around, send a message, and we'll make sure that things get answered for you. So these are the things that we are going to go over. We're actually going to go over interest rates. We're going to go over credit score, monthly payment, home buyer assistance, and paying your realtor. These right here, you have it, are the 5 myths that I see on a daily basis. We're going to uncover each of them, and you want to stick around because I think if you're buying a home right now, it's safe to say that you have questions about all of these things. So the first one we're going to go over, well, first I want to go over some statistics. And this is part of the confusion. So I was scrolling around online and went to the National Association of Realtors has a really good platform of data. So I went there and I saw some stats that say that 97% of buyers actually used the internet in their research. We're actually going to put this up on the screen for you so that you can see 90% right there use the internet in their home search. That's 97% of opportunity for you to get distracted, over information, overwhelmed, what's what. There's 10 screens here, 10 pages of information. How do I know what is real? Okay, 97% of the time, opportunities. There's also some stats that say that home buyers they're online for like 3, 4, 5 weeks. Actually, 41, another stat we've got here on the screen, 41% of buyers, the first step that they took was to look online, and they were scrolling online before they ever talked to a professional. And then if you go down a couple of bullets, buyers typically search 10 weeks and look at an average of 7 homes and view most of those online. And this is probably when they're on their own without any help because they're just searching. You don't want, I get it. You don't want to commit to anybody. You don't want to talk to anyone. You don't want to get spammed. You don't want to get, more over information because you haven't quite decided yet. You're just deciding if this is the right time for you. So if I'm talking to you and you're like, oh my gosh, that's me, let me hear from you. And I hope that what we're going to talk about next is going to help, solve some questions for you. So the first thing we're going to talk about is interest rates. It is the big elephant in the room, and it's what everybody talks about. Everybody, definitely, we all want better interest rates. I hear you. I feel you. I'm trying to actually refinance my house right now, but I can't because I had an adjustable rate mortgage and it actually adjusted on me. That's a whole other topic though. We'll go over that another day. But if you're buying your house for the first time, you definitely need to get a fixed mortgage. But the rates is super, super important. So I did a little research online, and I do this all the time, but the rates are not, the myth is that the rates are the same no matter where you go. That's not true. So this is the first search that I did. All I did was I searched in the search bar, interest rates. And this is what came up. These are articles. I circled them for you in pink so that you can see. One is, what's the mortgage rate forecast for September 24? Another one says, mortgage rates fall, mortgage rates today fall. The other one says, should you wait for the September Fed meeting to buy a home? Another one said, interest rates have dropped, but homeowners are not moving. So this is the first thing that I saw. And then I dug a little bit deeper and I saw actually a couple of pages that have rates on them. So this was super interesting. So, you know, on the right-hand side, there's 30-year loan, 20, 15, 10-year. Of course, a lot of times you're just searching and you gravitate to the lowest rate. You don't see that it's a 10-year, right? You're not like, ooh, 5.25, I want some of that. And then you're like, you may not realize that that means it's a 10-year payback, which means your payment's a lot higher. Then I gravitated to down towards the middle, and both of them have similar interest rates, but one of them, the APR is higher than the other. And you're probably like, what's APR? I don't even know what this APR thing is. It's annual percentage rate, and the annual percentage rate is not the interest rate. It's actually the cost of your money, including closing costs. So one of those samples must have had more closing costs than the other. But online, they're not going to show you all of the fees because there's not enough space, right? The goal is that they want you to call, and they want you to fill out your information on their website so that they can call you and spam you and all that good stuff. Not to say the internet is not a good place for information. I'm not saying that at all. I don't want you to misunderstand. I'm just saying that I can imagine putting myself in your shoes, that you're searching online without any guidance yet because you don't want to talk to anybody yet because you're just researching, right? And what you're researching, you may or may not be understanding. I'm just trying to just kind of set the foundation of what home buyers probably experience, okay? The other thing on interest rates that you want to make sure to note is that the very small print, what it's saying, you might not know how to decipher it. They're like, oh, here's this sensational rate. But in the really small print, it might say, yeah, but there's 1.9 mortgage points that are associated with that. And you're like, well, what are mortgage points? I don't even know what that is. That's a percentage of the loan amount. So if your loan amount's $100,000, 1.9% is $1,900 to get that lower sexy rate that you're seeing. So online, it's busy. There's lots of words, there's lots of numbers, there's lots of logos. You might be missing some of that small print. Now, the other place I went, real popular lender out there, Rocket Mortgage. So I went to their site, and in order to get the rate, I was like, oh, cool, they're going to give me the rate. And I had to answer like 12 screens in order to get there. And then boom, at the end, before they're giving me what I wanted to know, after answering like the 12 different questions, bam, they wanted my phone number. So that's, and probably they might have given a good specific rate. Actually, the questions that it was asking was really good. Like, are you this? Are you that? What about this? What about that? So they were fine tuning things so that they could be more accurate, which is great. But you're probably hesitant to give your number or your email to someone online that you don't know, right? So I can imagine that a lot of home buyers, you're stuck, you're at a wall. You're like, nope, I'm not giving my information out. I'm going to keep searching and go see what I can get for free without obligation, without talking to anybody. So the reason I say that interest rates are a myth is because you're navigating, you don't know what's what. You don't know really how to read the small print because everything is just very visually polluted. And then you kind of get stuck. Okay. And by the way, when one of our next things that we're going to talk about is really super affected by the interest rates, are actually really affected by credit score. So we're going to go to that one next. We're going to go to credit score. So credit scores is actually the biggest myth of the 5 that I'm talking about today that I see. So credit scores are just mysterious. There's over 35 algorithms of credit score. Now, I went to myfico.com. I personally think that myfico is the #1 site when you're going for mortgage credit scores to go to myfico. Now, this is not sponsored. MyFico is not paying me. I just taking a bat for the team, and I'm letting you know that from what I see, I've been a lender for 29 years. Now, credit scores have not been around that long. Credit scores have only been around for, I'd say 15, maybe 20 of those years. But the credit scores keep, over the years, they've kept getting tighter and more efficient and more efficient. So the big myth here is that not all credit scores are the same. So as I can show you here, over 35 different versions of FICO. Now, FICO stands for Fair Isaac Credit Corporation. There's a large history behind it, but they're the entity that developed this algorithm method for bringing some kind of sense to how people pay their bills. And FICO has just been adopted, and it's been the system that like 90% of the lenders have adopted as a reliable source for credit score calculation. That's, I think, the most eloquent way that I can put it. So that being said, many consumer online sites, again, you go online, you're searching, you're on there for 3-4 weeks on your own without any advice, right? Because you don't want to commit to anything. I get it. I hear you. And you're like, oh, ooh, CreditWise, Credit Karma, Experian has a score. Experian's one of the bureaus. You would think that that is factual information. Then you're like, oh, my credit card, my Discover gives me a score. My MasterCard gives me a score. Actually, my bank account, even at my bank, gives me a score. So all these different places are giving me a score, and they're not all the same. So which one do you rely on? It's really hard to know. What I can tell you with certainty, here's the myth bust right here. Are you ready for it? Is that the credit scores by lenders that we use are all from the same versions of FICO. And the reason that lenders do that, as an industry, they've band together and said, hey, we are going to do this the same way, because this ensures that when we transfer and sell the servicing of the loans between each other, then we know that the foundation of the analysis, we know that the computation is correct. We know that that credit score is the same in all of our models and that we can rely on it. So there's only one way for lenders, and it's usually not what you're seeing as a consumer. I've actually seen credit scores, unfortunately, when people come to me and they say, oh, yeah, I know my score. My score is 750. And we pull it, and it's actually like 710. Now, sometimes we pull it, and it's the same. I actually pulled one yesterday, and it was 20 points higher than they thought. So now you're more confused because I just told you all these different things. There's no conformity. There's no pattern. It depends what's on your credit. So I think my big takeaway here, that this is super important, is that a mortgage lender pulling your credit is the only way that you're going to know what your mortgage score is. So get referrals from friends, get to a lender as soon as you can, because that's the only way. So if you don't want to do that, then myfico.com is what I have found in research and testing what clients tell me to be the most accurate that I can tell in most cases. Okay, so that was the myth about credit. Now, I've got a couple of questions here I'm going to answer because we are live and we're going over a couple questions. So what's the best way, Jenny, good question. What's the best way to find out the real interest rate that you would get? Talking to a lender, letting them pull your credit, because credit drives your interest rate almost 100%. That's like the #1 factor. And so looking online is a good gut check, but it is really not real. What's your down payment? What's your credit score? What's the timeline of you buying? Are you getting down payment assistance? What's your down payment? Et cetera, et cetera. All these things really go into a factor of your interest rate. Another question, how do I know what my real credit score is? The MyFICO site really, I think, is the best one. If you're wanting to not commit yet, you don't want to talk to a lender yet, you're just really not ready for that part, I would go to MyFICO. There's probably some kind of fee. I don't know what it is, but I find that that's the most reliable. Okay. If you're wanting to know what your mortgage type closest credit score is. And yeah, those are our questions. So now we're going to go through the myth of monthly payments. Okay, this is really a big one that a lot of you probably don't think about. Like you might be kind of blindsided by this. Monthly payments, monthly calculators online are wrong 100% of the time. 100. I actually went to 3 sites online, just random, and I have these screenshots for you here. And I even myself was shocked at the difference. So if you're one of those people that you're online and you're looking, it's, you're 3, 4, 5 weeks, you're looking and you see this beautiful house on, a popular site is Zillow or Redfin or Realtor.com or your local MLS website. So I'm in Houston. So I went to our Houston website, right? Like you're looking in all these places. And then I even went to Google, which is the #1 search engine in the world. And I went there and all of the results on all of them were different. Let's check it out. So the first one I'm going to show you is we went to Zillow. That's a popular site where properties are. So the mortgage calculator here shows that the payment was $2,188. Now, first thing I want to let you know that what you may not notice is that it says 20% down. So if you're cruising through here, you're going super fast, or, you just put the kids to bed and then you're tired, it's 11 o'clock at night and you're just, scrolling around, you may maybe you don't have your glasses on and you don't see that it's 20% down. Now it looks here like you can change the down payment, but the default is 20% down. The next thing I'll say is that they have tax at $147. Now, I don't know about where you live, but in Texas, there is no tax, no property tax for $147 a month. Like, I just don't even know where that exists. If that exists, I actually want you to comment because I would love to hear from you because I need to know. Now, maybe if you own some raw land with nothing on it out in the boonies, yes, that could be your tax for 1 month. But you guys know where I'm going with this, okay? The other thing is they have insurance at $105 a month. Again, it matters where you live. In Texas right now, or especially Houston where I live, there is no insurance for $100 a month. Like, I just don't think it exists anymore because we have hurricanes and hail and flooding and all kinds of stuff. So I think my point here is Zillow is a national website. People from all over the country and all over the world are watching. And these websites, they're just making some generic assumptions. So here's one where you're like, okay, cool. This house, I used $400,000, by the way. Oh, cool. My payment's $2,100. Now let's go to the next one and let's see. This one was in our local MLS here in Houston Association of Realtors. And I used the same 400,000 because I wanted to try to get the same results. Now this one also has 20% down and bam, $2,937 a month. This is this is actually $750 higher than that prior website. So I was like, let me do some digging and see what was different. They had the tax at $1,000 a month, which is probably closer to right. Just knowing the area like I do. And remind you, Zillow had the taxes at $147 a month. So $147 a month and $1,000 a month. That's a big difference. there's no, on the Association Realtors website, the Houston one that I went to, there's no insurance at all anywhere mentioned. None. Okay. So then I said, all right, let me go to Google. So let's go to Google. 2,471. That was right in the middle. That one actually let me input some of these variables. It actually let me input the tax and input the insurance. Now, I do want to say this. If you're a first-time buyer especially, you don't even know what that means. You're like, what do I use for insurance? What do I use for taxes? This is like this is a different language for me. I have no idea what it's talking about. So the thing I have to say about that is that the input that you put in those fields is only as good as if it's accurate or not. And you probably don't know. So this one can also be a little bit misleading. I think my point here is 3 different sites, 3 different payments. So that's really important to know. So you're probably like, okay, Jen, so how do I avoid this myth? You need to talk to a lender in the local, like in the state where you're buying, because they're going to understand the property tax system. They're going to understand the homeowner's insurance. If I'm talking to someone in New Jersey and I'm in Texas, and Texas is the only place I do business, and I'm not used to doing New Jersey, I might make a mistake. Like I might be like, I don't know what tax and insurance is in New Jersey, right? Like, I mean, I could easily find out by talking to some local experts, but it's going to take me longer to know how to talk to you and advise you. So my suggestion is, I'm a real big proponent of a localized state lender that's in your state where you're buying the property. Okay. That's how you can really narrow down this myth and not make this mistake and avoid the confusion of what is your monthly payment. So we're going to keep going. And the myth of down payment assistance. So first, you could call it lots of things. First-time buyer programs, first-time buyer assistance. I do want to mention that there is assistance available even for repeat homeowners. So for those of you watching that might have owned a home before and you're wondering, is any assistance available for me? Usually the answer is yes. And again, here's where I'm going to mention again this state level talking to someone. Every state is different. So there is no money currently at the national level that the US is just handing out. It doesn't exist. I know there's proposals and nothing's been passed yet. Well, it doesn't exist right now. So what the US government does is there is federal money that's passed to the states, and then the states divvy out the money to the people. Now that's how most programs work. There's some programs for, people that might be Native Americans and they live on a Native American site. There's some money for people. There are some national programs available through some homeownership initiatives, but these are really rare. And I'm talking about kind of in a general way. Down payment assistance, there's a lot of confusion, because even I get confused, and I do this for a living, because there's lots of divot programs. So in your local area, a local lender is going to know what might be available. There might be something available in your specific city that's only, like here in Houston, there's a City of Houston program. If you are a lender and you're in Ohio, you're not going to know that. The other thing around this is that people think also that 20% down, I do want to mention this. Homeowners think that 20% down is a mandatory requirement, and that's actually not true either. So that's why these down payment assistance programs can be really cool, because they can help you get over the edge to get into a house for very little or a lot less than you would before. So just wanted to mention that. So the myth of buyer assistance is that there's first-time buyer assistance that's just available for every first-time buyer. There are qualifications. There are strings attached. You usually have to meet some type of credit score. You usually, most of the time, not all, have to be below a certain income level. below a certain debt to income level. And so not all assistance is available for everybody. There are criteria, there are requirements. So again, get with a lender to help you to be able to know and how to navigate, hey, what's available for me? Okay, that's my biggest power tip in this section. So the next thing I'll go over, the confusion. So there's a myth, this actually has developed most recently, about paying your realtor. So August 17th of 2024, yes, there were some national legislative changes that are mandatory for the industry. And there, of course, there's misunderstandings that every home buyer now has to pay 100% for the realtor. That is not necessarily factual. Sometimes maybe, but it depends who the seller is. So the thing I'll say about this without getting too nitty gritty into it is that I'll tell you what the changes are, and how to navigate them is to talk to a professional so that you can know what's what. I actually have a YouTube video that I did a live a few weeks ago about changes in lending, actually, also because of these new rules in realtor commissions. You can go to my YouTube website and get it, and I'll put it in the notes wherever, whatever platform you're watching on. But bottom line is there's these 3 changes that are happen that are mandatory. So I'll put them up on the screen. One is the MLS, which is the multiple listing service, will no longer show what compensation the buyer's agent or the other agent actually is going to receive. So that's a change from in the past. So it's not known as you're looking at homes, what, if any, compensation that the seller is going to offer to pay the realtors. The reason I mention this too important, you're probably like, okay, how does this even apply to me? So I think I mentioned before that I've done this for a lot of years, 29. And in all those 29 years, the way that it normally has worked is that most sellers will just include the price of the compensation to not only their realtor, but the buyer's realtor in the price of the house. It's just kind of how it's been done. Well, now there's a promotion of transparency where it's not online anymore. That's kind of contradictory. Like, oh, I thought you want to be transparent, we can put it all out in the open. Well, no, it's up to negotiation, and it's up to the realtors to negotiate that on each individual house when they present their offer. Okay. The second thing that's changed is buyers must sign. This is a big one. Buyers must now sign a written agreement called a buyer's representation agreement that has always existed, by the way, before they're shown a house by a realtor. So what this does, and this is actually a good thing, it forces home buyers and realtors to discuss compensation and negotiate what their compensation is going to be for helping them, which is it can be a percentage, it can be a flat fee, or it can be hourly. So any of those things, it needs to be fair and reasonable according to the guidelines. So just be prepared that you will talk to a realtor. Realtors will explain that to you. They will let you know what their fee is, but that fee is not due until you buy a house. So there shouldn't be an upfront fee. The fee is paid, once you consummate everything and do the closing. The third thing is that agents must disclose the amount of compensation that they're going to receive. Like I mentioned, a flat fee, percent, or hourly rate. So everything has to be disclosed. Everything is very transparent. And again, this form that you're signing existed before, but what happened is a lot of realtors just said, oh, I'm not going to get the form signed. I'm just going to, we're just going to go on with it and see houses, and we're just going to close. It wasn't as official. So now it's official. So when you're going to be buying a house, just be prepared for that. So back to the myth that buyers now have to pay it. Buyers have always had to pay it, but most of the time it's just been included in what the seller is offering in order to sell the house. Because, you know, most sellers understand that the buyers have to come out of pocket with a lot of upfront out-of-pocket expenses. And so the sellers, you know, using their equity in the home, they're like, oh, well, I don't have to come out of pocket with anything. I'm actually getting a check. Most sellers are getting a check. So they just kind of wrap it in it just helps home buyers not have the burden of these fees up front. So the system has always worked that way. It's just a little different now how you get there. And so again, talk to a professional realtor. They will definitely explain to you probably more eloquently than I did. But I want to let you know that the myth that buyers now have to pay all of the realtor buyer, their agent representation compensation is not necessarily correct. So in summary, here are the 3 power tips that I promised of how the 3 tactics of how you can avoid confusion, misinformation, myths. You can call it whatever you want. The 3 power tips that I have for you are very simple. Are you ready for it? Talk to a professional soon. Get referrals to lenders and realtors in your local area, and get pre-approved with a lender earlier than later. Number 3 is actually the most important one because it can bring so much clarity and so much information and knowledge, because all these other myths that we've talked about could have been avoided had you just known what your payment was, had you just known how to navigate, how do I know what the rates are and what are you talking about? You know, what's this realtor thing? How's the realtor paid? What cost do I have? All of these things can be evidently clear when you just let a lender pre-approve you. And there's no cost to get pre-approved. Like if a lender is trying to charge you to get pre-approved, you need to go somewhere else because there should be no fee. Okay. I mean, we don't get paid until it closes. So I actually prefer, it is not a waste of time for me to pre-approve people. Like I love to talk to people 12 months out. So don't be shy. If you are online searching at houses at midnight after the kids go to bed, that means right when you start to do that and you start thinking about buying, that's when you need to talk to a lender. Get recommendations from friends. That's the best power tip that I can give you. Thank you for joining today. And I really want to hear your questions and what your biggest aha moment was of today. And I'm happy to help. Talk to you soon. See you next week. Bye.